Good day, traders. This is Richard. Good day, traders. This is Richard. Today I'm going to talk a little bit about trading. Everybody wants to know how to trade the financial markets, and it's a very complex curiosity. Everybody wants to be able to take a little bit of money out of the financial markets, but a lot of people don't know how yet. And they want to know how, and they don't want to invest their fortune trying to figure it out. So whether your fortune's $5,000, $50,000, $500,000, $5 million, or $50 million, I don't care, because you can trade with $5,000 and make a little bit of money every day. I trade with about between $4,000 and $7,000 and take 500 a day out of the market every day between 5 and 7 a.m. 2 hours. I invest in the market. That's all I put into it. That's all I want to do. If I wanted to make more, I could. I don't need it, so I don't. But I have a lot of fun doing it. It's the most exciting thing you can do from a chair. You can race motorcycles. You can skydive. You can fly jet planes. You can fly fighter jets. All of it takes a little bit of regimen, a little bit of routine, a little bit of learning, quite a bit of learning. So decide that you're going to learn what you need to know before you risk your first nickel. I always expect a quarter coming back from every nickel I invest. Always. If I can't imagine getting a quarter back, I'm satisfied with a 3-to-1 in risk reward, but I like a 5-to-1 risk reward. So I try for that, but I might only get a 2-for-1 risk reward because I try to succeed on every trade, but I don't. Nobody does. If you can bet 80%, if you can get a positive trade out of 80% of your efforts, you're going to make money all year long in this business. But if you're only batting about 60%, you won't, because the costs of doing it are going to take 5 or 10%. And your profit comes from, okay, that'd be 60%. Anything over 50, anything less than 50%, you're losing money. So you've got to plan. You got to learn how to take success between 80 and 85%. That's the sweet spot. Any less than that, and you're going to lose too much. Any more than that is unrealistically optimistic about making tons of billions of dollars. Not going to do that. You can make about $100,000 a year easy. $500 a day is $100,000 a year. You want to make $200,000 a year? Well, trade with a $10,000 account and trade 4 hours a day. But I don't have the energy at my age to trade 4 hours a day, because you need to have focus, energy, determination, and stamina to trade. FEDS. If you lack any one of those 4 ingredients in your personality, don't risk it. You'll fail. Now, I'm looking at a series of charts over here. I'm going to look over to the screen, so you're going to see my head looking at my other screen, where I've got 3 categories of information. I've got some charts over here on the left. The upper left is crude oil. The one next to it on the right is the euro currency. And the one down below is gasoline, RBOB gasoline, unleaded gasoline. And over here, we've got the dollar index, and below the dollar index, I think we've got another British pound, maybe. Yeah. Okay, and on the right, I got a Word doc here talking about the things you need to know to trade successfully. And there's 10 of them. So there's a baseline. You know, if you're going to build a building 10 stories high, 50 stories high, 100 stories high, you start at a cornerstone, the baseline. Same thing with trading. You look at a candlestick, and it's composed of 4 parts: an open, high, low, and a close. Candlesticks are the bread and butter of trading. These are candlesticks. This candlestick here is showing me that I think it's a bullish chart here. Let's take a look. Let's blow that chart up a little bit and draw a little bit of stuff on it. I'm going to go up here and get myself a triangle, and I'm going to draw from this low up to this high, back down to this intermediate low. And I believe that price is going to go up to 109 from its current price of 108. $1.8750, which is not much, but it is a move up. Now, price has gone from $1.08 and some change up to $1.14, and then back down to $1.0850. But the point from $1.08 up here to $1.09 is the destination point. And then from there, once price gets up there using these candlesticks and you hit that green yellow line up there, it's going to come back down. I'm going to draw a little arrow what I expect to happen over the next 17 or 20 hours. So we're coming from here. We got up here, and now we're getting a black candle here. So I think we're going to come down a little bit like this. And then once we get down a little bit like that, I'm going to draw a little Fibonacci over here. And from here up to here, and here's the 38.2. I'm going to move that horizontal line from there up to that 38.2. And that's the pullback I'm expecting right here. So I'm going to move that little arrow down to that line. And once it gets down to that line, it's going to resume its ascent and create another A, B, C, D, like the one I drew a few minutes ago. That's not what I wanted. I want that little arrow, little red arrow, because I'm going to bounce off of that line there and go up toward that line up there. And then I've got an A, B, C, D, very much like this yellow A, B, C, D, from this low up to that high. And then that's an A, B, C, D into the future. I don't know exactly that it's going to do that, but it'll do something like that, something close to that. So we're going to pull back right now. So I would be a buyer down here. You could sell this and write it down there if you want to, but you can put a standing order right here. I can right click and go and say buy MIT.
Order submitted.
That's market if touched. And then it's going to go in with a one contract trade with a stop 10 ticks, a target 30 ticks, and we'll make $300. No, we won't. We'll only make about 30 times $6.25, because we're looking at the euro. It trades at $6.25. So 30 times that's about $180 if we got 30 ticks up there, and that's going to be somewhere in here. But if we get all the way up to there, we're going to make 200 or 300, maybe 700. I'm not going to sit here and do the arithmetic. I'm just going to systematic wild ass guess it. Swag. Okay. That's enough to tell you what we do, how we do it a little bit. Now, we have to go back to that other list of things and continue on. There's 10 things you need to know. One is the baseline, open, high, low, close. And that's the baseline of a candlestick. I showed you those candlesticks over there. I'm going to bring it back, and you see those are candlesticks. And this is the open of a white candle, opens at the bottom, closes up the top of the body. And that's the high up there at the top of the wick. And that's the low down there at the little bitty wick on the bottom. It's the low. And if I were to go and hit that arrow there, you can see the open, high, low, close. See OHLC over there on the left. That's what you're looking for baseline. The candlestick is there. Now, you also need to know how to forecast. Well, I was forecasting when I showed you this. I was forecasting the future. This has already happened, A, B, C, to that part of that D up there. And it's only halfway there. And that's another A, B, C, D. I just drew it for you, a little sloppy, but I drew it for you on these red lines. See, that's A, B, C, D. And I'm showing you we're going to head on up there to near that yellow line up there on the top, but not get all the way to it. And then we're going to come back down later like this. We'll be coming down. That's A, B, C, D. That's forecasting, and that's candlesticks. Now you need to use indicators. I was using an indicator when I was drawing all those marks on there. That's a drawing indicator. That's real important. There's 7 or 8 indicators on this chart. I'm not going to go over them now. I'm just going to let you know they're there, and you'll want to learn how to use them, how to read them, and you'll learn how to trade initially. Eventually, not initially, but eventually you'll learn how to trade. Recommend you don't try to trade with real money until you learn what you need to know to do it. So the next thing after indicators is regimen. Routine. Now, I've shown you my routine here a little bit, what I do in forecasting, what I do to understand my baseline. I've got to understand my candlestick formations, my patterns. I have to understand what I want out of this trade. That's a forecast. I use geometry and the Fibonacci number series to get it. And I've shown you all that already. I've shown you one of the indicators. Here's another indicator. It's called the relative strength. When it's right in the middle like that, it doesn't mean much at all. But when it's extreme up there, you want to sell it. When it's extreme down here, you want to buy it. And this is the volume. This is the fuel that makes the market move. Over here, there's a huge move, a huge green candle here, and it coincides with that big white candle there. And then we had this black candle, and that's why this candle is red down here. Red for bearish, green for bullish. I use black for bearish and white for bullish up here in the candlesticks. So now after indicators, we have to have that routine. I told you a little bit about the routine, and there's 20 or 30 different kind of routine things, maybe even 100. And you'll get that when you study some more. But right now, I just want to give you an introduction. Then we need to figure out how we identify trade alerts. I showed you a couple of trade alerts. It's a trade alert right here. You see that thing, that candle's turned black and it's starting to come down. And I've got that arrow pointing down. I'm expecting it to go down and to get filled down here, but I could actually short it right there, and I could do it right now.
Order submitted. Order filled.
Now I'm in it. You see, now I'm in it with a one lot, and I'm waiting for this one down here. As soon as price gets down there, I'm going to buy it. But right now, I'm going to stop up here. If we go up that high, I just tighten the stop a little bit, and then I've got a target down here. If I get that far down, I'm going to get filled and make some money. If I don't make it down there, I get stopped out up here. I lose a little bit of money, but I'm not going to lose very much. I'm tightening that stop a little bit more. So I don't care whether I get stopped or go down here and make some money. It'll be one or the other. And then after that, I'll get filled down here and go north, because when price gets down to that yellow line right there, that's where it'll want to turn around and go up. Remember, I drew that arrow right down to there, and then I got another arrow going up that way. Now, that's the signal, the trade alert. And then the structure, all this is structure. We got more than one kind of structures. We've got sequential structure, we got fractal structure, and some others. And then terminology. I've used about 17 words you never heard before in the last 12 minutes. Now listen, they're not hard to learn, but they do take some time and study to learn the lingo. It's just like if you raised an American only speak English and you want to learn to speak Spanish, you've got to take a little course in Spanish. Then you got to talk to some people in Spanish to learn it. So learning trading is about as difficult as learning Spanish if you're only an English-speaking person and want to learn Spanish. You got to put some time in. You got to put some focus in. And you don't want to go to a board meeting that's where everybody at the board meeting is speaking Spanish and you're the only one in there that doesn't speak Spanglish. You speak a lot of English and maybe 7 words of Spanish. You would be ill-advised to accept the position on that board of directors, because you wouldn't know what they were talking about 90% of the time. So you got to learn that stuff. You have to learn to trade before you try to trade. You got to learn to speak Spanish before you go to a Spanish board meeting to understand what's going on. So plan to study a little bit. Then after you've figured out the structure, the terminology I just mentioned is really hectic. There's about 500 words you need to learn. Words and terms and concepts. Maybe only 100. I don't know how many it is. It's a lot. And then time frame. There are 10 time frames, all the way from a year down to 15 minutes. 10 time frames. Now you've got it in a nutshell. I've told you everything you need to learn about in the business of trading financial and commodity futures. We don't trade stocks here. I don't know anything about stocks. I learned a little bit about stocks back in 1998 when I first started trading, and found out I didn't want to trade stocks because they don't let you sell stocks unless you own a stock. See, I've already made $12.50 over here. When that's green right there, I'm making money. I'm not making enough money to worry about it yet. So anyway, the description of all these things is right here in this text. I explained all 10 of those concepts right here in these words. It took me 3 pages of typing and pretty big type to do it. I guess it's 4 pages. That's it, 4 pages. So that describes all those concepts time frame, structure, regimen, patterns, platform, geometry, forecasting, candlesticks, baseline. Now, that is an introductory commentary to help you go away from this discussion and know what you need to learn before you risk any money. Now, I like to set it up in 5 quarters. It'll take you 5 90-day periods to figure out how to do this in sufficient competence to risk some of your money. I don't recommend you trade with real money until the 4th 90-day period. The first 90 days, study, learn, watch, see movies, watch videos, think. The second 3 months is to get on a simulator. I use NinjaTrader. NinjaTrader has a free simulator. You can use it for free forever. Never have to spend a dime on it. Then, after you've spent 3 months studying, 3 months overview, then 3 months on the simulator, start trading on the simulator in the 61st day all the way to the 90th day. Trade on the simulator. Try to take a $5,000 simulator account and double it to $10,000 during the third 90-day period. Now, in the fourth 90-day period, you want to trade some real money. So open yourself a $700 to $1,000 micro trading account and trade dimes on dollars with the objective of doubling your money during that day number 91 through 120. That'll be a year. After you finish trading dimes on dollars, if you were successful at doubling your a $500 account or $700 account to $1,400, then you can use that $1,400 to trade a couple of the instruments that only cost $500 to go into for 90 days full size, and then try to double that account again using full size. If you crash and burn and don't double it and lose all your money or lose 2/3 of your money, stop, go back 4 or 5 months and review it again and redo it again, the same exercise I just described to you. So it takes 5 quarters or 120 days, 150 days to learn how to do it. About a half a year, a little bit over half a year, not quite a half a year. Half a year is 180 days. So 5 quarters, 5 quarters. It's really a little bit over a year, not 2 years. So that's the way that you ease yourself into trading without risking your nest egg. And if your nest egg is only $5,000, I don't care, it may be 50,000 or 100,000 or 200,000 or $500,000 or possibly $1 million or more. Doesn't matter. You can do it with $5,000 of discretionary income after you paid your rent, and your car payment, and fed your kids, and paid your house payment, all that. And you got $5,000 extra. Risk it after you studied for about 150 days. But don't risk any money until you put 150 days of study into it and practiced, because you will lose it. I don't want you to lose it. I want you to win. I want you to take this challenge, try to learn how to trade and take some money out. I take about $500 a day to keep the job away, to keep myself busy, and to entertain myself, and to serve my ego, make me feel good that I did something positive today. If I lose a little bit of money today, so no sweat, I'll make more money tomorrow. But I'm not going to try to become a millionaire again and again and again. I just do it because I'm an old man and I like to trade. But when I was 30, I was actually nearly 40, I tried something and goofed up because I didn't know what I was doing. I've been an entrepreneur all my life. Didn't really know what an entrepreneur was, probably the first half of my life, but that's what I've been. And all my ancestors were entrepreneurs or one way or another. One of my grandfathers on my mother's side was he was a timber guy. He was one of those guys that went down to Alabama and cut wood and then rode it down the Tombigbee River to the mill. That was pretty dangerous work. I'm surprised he survived it, but he did it between age 20 and 30, and then between 30 and 40, he had a grocery store or a general store in a little old town in Tennessee, and decided he would go to Oklahoma, a little old town in Broken Arrow, Oklahoma, and kind of build a grain elevator there, and got that going. That's what an entrepreneur does. He does one thing when he's 20 to 30, does another thing when he's 30 to 40, does another thing from 40 to 50 and 50 to 60. And then my brother came along, and I've been an entrepreneur. It's in my blood. And it doesn't matter whether you're a plumber or a lawyer or a banker. If you want to learn to trade, I'll teach you to trade. My name is Richard Rube, and my website is swissft.com. Let me see if I can get it up here and show it to you. I think I've got it right here. This is swissft.com, and I broadcast every day between 5 and 7 a.m. Pacific time in the Zoom Room Radio. It's our Zoom room, and I take these trades I've been talking about in that room every day from 5 to 7. Just fill out this form and we'll invite you in for free. Thank you very much for listening. One of the things I like to say that sounds like a vernacular, but sometimes things are hard. Like a little kid sitting in a high chair learning to eat. And daddy's in there with this little spoon and this little jar full of Gerber's food, trying to get the little kid to eat that food. And you've got to kind of push it in there between the lips. And the little kid's trying to figure out what to do with that food, but he tastes it and maybe he finally sucks it in after he's sitting on his lips for a while. And that's the way you learn to trade. It's just like spoon feeding a little baby. I'll spoon feed you this stuff so you get it. You'll learn to eat. You'll grow up from 3 or 4 months old, 5 months old, 7 months old, however old you think, the little kids are when you're spoon feeding them like that, until they're crawling around, until they're running around, until they're riding bicycles or riding motorcycles or driving Corvettes all over the countryside. I'll help you. Thank you. Richard Rube signing off. You can write me at zoomroomradio@gmail.com. 8 to 80, blind, crippled, or crazy. I will teach you how to use my right-hand trade to take $500 a day to keep the job away in just 1 hour a day while you watch us trade live right before your eyes.